Okay, so we'll be discussing quite deeply about receivables, starting from what it means to be receivables, what's the definition of receivables, and then the types of receivables, yeah? And then we'll go into the details of how accounting treatment for uncollectible receivables, yeah, or normally you hear the term bad debt expense, yeah. So how do we treat those uncollectible receivables, yeah? And there are two methods basically in the treatment of uncollectible receivables: write-off method and allowance for uncollectible receivables, yeah. So we will discuss about those two methods. We compare how is it different, the accounting treatment under direct write-off and allowance method. Yeah? And also, besides those topics, we'll also go into detail about the notes receivable. Yeah, you've heard the term notes receivable, right? We will discuss later on. And how do we report or present receivable on the statement of financial position, yeah? And maybe a little bit about the financial statement ratios, yeah? Account receivable, turnover, and number of days sales in receivables. Okay, whenever you have question or comment, you can just interrupt me, no problem, okay? Don't just let me talk by myself. Yeah? I feel like I'm a tukang jual obat. Azmi and Mujib, you know, tukang jual obat is the drug seller in the market. You know, they keep on talking by themselves. Yeah, people are listening to them. Okay, now let's understand what is it receivable. Okay, so as you have understood so far, receivable is anything that is supposed to be received. Yeah. Because we're talking from accounting perspective. So when we say anything, it must refer to something that can be measured by money. Yeah? So all money that can be received from any other party. Yeah? That any other party or entities, it could be persons or individuals, it could be organizations, it could be government, it could be other companies, it could be the person just now, individuals, could also be the employees, yeah, within the company. Yeah. So when you imagine receivables, don't only imagine receivables coming from the customers. Yeah. It can come from any other entity. Yeah. Outside and inside the company. Yeah. Okay, and receivables mostly is a significant portion of the total current assets. Yeah. When you see the components of current assets, receivables are normally placed after cash. Yeah, because cash is the most liquid, and then receivables is the least liquid, but it's almost like quite easy to get the cash from the receivables, yeah, compared to the next item under current asset, which is inventories. Yeah, so cash, receivables, and then inventories. Yeah? Okay, how many types of receivables that we have? We can classify receivables based on the nature of transaction that is involved in receivable itself. Yeah, whether the receivable coming from the main operation of the company, which we call as trade receivables, yeah, trade receivables, or if it comes from other transaction except the main trading activities of the company, then we will call it as other receivables. Yeah. So trade receivables and other receivables. Yeah. Other receivables may be the loan that being given to the employees. Yeah. And that loan will be paid later on by the employees. So when we give loan to the employees as a company, that loan amount will become other receivables. Yeah? We don't record it in the trade receivables. Yeah? That's the classification of receivables in terms of the nature of transaction which result in the receivable. Okay. Okay, another approach of classifying receivables, yeah, is from the formality of the receivables. Yeah. From the formality, we can divide into account receivable and notes receivable. Yeah. Account receivable are normally coming from the trading activities or the main operation of the company, and the payment due is less than 60 days. Yeah. And it's less formal. It doesn't have any document specifying what is the maturity date of that receivable and then to whom it should be paid. Yeah. Basically, it doesn't have a formal document. Yeah. That's why it is classified under account receivable. Yeah. Meanwhile, notes receivable is a more formal type of account receivable. It has a specific document, yeah, specifying when it is due, how much it is due, and then there is an interest rate to the notes receivable, yeah. And it's normally more than 60 days payment due, yeah. So for any trading receivable that is more than 60 days due, normally the company will make a notes receivable. Yeah. So the customer will have to pay the interest, yeah, for the notes receivable. Yeah. We'll see the details later on. Okay. As you have understood, how do we create account receivable? Basically from the credit sales. Yeah? Whenever there is a credit sales or providing the service on credit or on account, another term, then we will debit the account receivable, right? And what do we credit? Credit sales or credit service provision, what do we credit?
Service revenue.
Yeah, service revenue or sales revenue, yeah, if it is a trading business. Yeah? If it is a service company, then service revenue. Yeah? So as I mentioned, account receivable mostly for shorter period, less than 60 days, the payment due. Yeah? And account receivable, we classify it on the statement of financial position as a current asset. Yeah. And then as opposite to account receivable, notes receivable, as I mentioned to you, is a formal one. Yeah? A formal document is being made for this type of receivable, and it is more than 60 days, normally the payment due. Yeah? If the notes receivable is expected to be collected or to be paid within a year, then it will be classified as a current asset. Yeah. But if it is beyond 1 year, then we will classify it in the non-current asset, yeah, under investment. Yeah. And sometimes the account receivable being converted into notes receivable. Yeah. let's say after 60 days, the customer still cannot pay the account receivable. So the customer requests that that account receivable be changed into notes receivable. Yeah? So they will create a notes receivable for that account receivable with the interest rate, and an extended payment period. Yeah? Okay, notes and account receivable that are coming from sales transaction or providing the service in the service companies, then we classify it as a trade receivables. Yeah? But some notes receivable may not the trade receivable, yeah, because the note receivable may also come from other party. Yeah, let's say another company is borrowing money from us, yeah, and we create a notes receivable. So that one is not trade receivable. Yeah, that one is other receivable. Anyway, on the statement of financial position, you won't see the classification of trade receivable and other receivable. Yeah? But normally they classify it as account receivable and notes receivable. Yeah? Or they put it in one item, receivables. And then in the notes to the financial statement, they will explain in the detail how much is for account receivable, how much is for the notes receivable. Okay, I have explained a little bit about other receivable. It can come from any other receivable that is not related to the sales activities or to the provision of the service activities. Yeah, so it can come from the interest, tax receivable. Yeah, sometimes we pay more than what is supposed to be the tax, yeah, to the government. So the government would return to us, yeah, that overpaid tax. So we would create receivable also from that tax payment to be received from the government. Yeah? Receivable from officers. Yeah? We can also have dividend receivable. Anyone has understood what is dividend? Have you heard the term dividend receivable?
Yes, Miss. On.
Yeah, dividend is the return that we get from our investment in other company. Yeah, so if they don't pay, then we will create a dividend receivable. Yeah, so those other receivables are not trade receivables. Yeah? And the same ruling applies if we expect that those receivables will be collected within a year, then we classify it as current asset. Yeah? If it is more than 1 year, then it is non-current assets and reported under investments. Yeah? Okay, any questions so far about the understanding of receivables? Am I going too fast or too slow? Just let me know. So far, so good? You can eat and drink while we're having the lecture, no problem. Okay, no, there is a special issue when we talk about receivable, yeah, which is the issue of uncollectible receivables, yeah, because some credit sales is normally to be uncollectible. Yeah? The company is unable to collect the credit sales that they have done to the customers. Yeah? That's why many companies are avoiding the credit sales. Yeah? They allow the cash sales or the sales using the credit card. Yeah? So the issue of uncollectible receivable is not really applicable to the businesses like supermarket, like malls, yeah, because they don't allow credit sales mostly, yeah. They allow cash sales or the sales using the credit card payment, yeah. But for some other companies, beside the supermarket or merchandising firms, They are very much involved with the credit sales. Why they provide credit sales? Because they want to attract the customers, right? The customers, sometimes they don't have the ready cash to do the payment for the purchase. So if the seller offering the credit sales, then it will be a great offer for the buyers, yeah, or the customers. Yeah? So for those companies who are involved with very much credit sales, they have to handle the issue of uncollectible receivables properly. Yeah? And it's very common that certain percentage of their credit sales will be uncollectible. Yeah? Those uncollectible receivables, we call it as a bad debt expense. Yeah? Bad debt expense. Yeah? From the term itself is understood, right? In Malay, they call it hutang lapuk, like bujang lapuk. So a bad debt. Or uncollectible account expense or doubtful account expense. Yeah? These are several terms that we use for uncollectible receivables. Yeah? How do we know that our customer can no longer pay the receivable that they owe us? Yeah? Some indications are the receivable has already been due for a long time. Yeah? And then another possible indication is our customer does not respond to our efforts to collect the receivable. Yeah? They don't answer our call. They don't want to see us when we want to see them, yeah, to collect the debt. So that's an indication that we may not be able to collect the receivable. Yeah? The same example, like you lend the money to your friend, right? If you ever lend the money to your friend, after they agree to pay within 1 month, but after 1 month they disappear. Yeah? You cannot call them anymore. You cannot trace where they are anymore. Yeah? If you happen to see them on the road, they will avoid you. Yeah? So that's an indication that it is a bad debt already. Yeah? And another indication is when our customer files for bankruptcy. Yeah? They goes bankrupt. So that's a very clear indication that they cannot pay the receivables anymore. Yeah? Or close its business. It's almost the same like bankrupt. Yeah? When they close the business, and then the company cannot locate the customer. Yeah? Like I said, they disappear suddenly. They go somewhere. Yeah? It just means that they don't want to pay their debt. Yeah. Okay, so how in accounting do we treat those bad debt expense or uncollectible receivables? We have two methods or two approach: the direct write-off approach and the allowance approach. Yeah. For the direct write-off method, we only record bad debt expense when it actually happens. Yeah. Let's say just now we identify that customer A has gone bankrupt. Yeah? Only when we identify that it's already bankrupt, then we record the bad debt expense for that customer. Yeah? So that is called as direct write-off method. Yeah? For the second method, allowance method, we don't wait until the customer goes bankrupt to record the bad debt. But we provide a certain estimation at the end of accounting year, how much we expect that we won't be able to collect from the customers. Yeah? So sedia payung sebelum hujan. Yeah? So we already anticipate how much that the customer will not be able to pay. Despite we do not know yet what is the actual amount that the customers cannot pay. Yeah? So that what is called as the allowance method. Yeah? Okay, mostly the accounting standards in the world, International Financial Reporting Standard or IFRS, or our own Indonesian Standard Akuntansi Keuangan, they normally require to use the allowance method, because that is more conservative, that is more safe for the company, rather than the direct write-off method. For the small companies, it's okay for them to use the direct write-off method, maybe because they don't have so much credit sales, they don't have so many receivables. But for the big companies who are involved with a high degree of credit sales, then allowance method is better to use. Okay, understood? Okay, for direct write-off method, as I mentioned, we only record bad debt expense until it occurs or happens. So for example, 4,200,000 account receivable from Siska Amalia has been determined to be uncollectible. It has been decided to be bad debt. Then only at that time would record the bad debt expense. So we debit bad debt expense and we credit account receivable to reduce this amount from the customer's account. Understand the logic? Expense is always debit, and corresponding entry is we need to reduce the respective account receivable of that customer. Okay. Let's say, sometimes, the customer whom we assume to be bad debt, may suddenly come over to repay their debt. The same like for personal debt. Suddenly you forget already that friend who borrows your money. You assume that she won't pay or he won't pay anymore. But suddenly she or he comes back to you, mungkin sudah insaf, and she wants to pay back the debt. So the same scenario may happen in the business environment. So let's say this customer suddenly is willing to pay her debt, which previously we have recorded as bad debt. So how do we do in this scenario? We need to reinstate, or rewrite the entries to show again the amount of account receivable that she has. So previously we have credited account receivable, so it's gone already, right? Now we need to re-debit back that account receivable. So we can later on credit it with the amount that she pays. So we debit account receivable again and we credit bad debt expense. So the opposite entries that we need to do. Because we want to munculkan kembali. We want to re-emerge how much she owes in account receivable. And for the amount of payment, it's just as normal. We debit cash and we credit account receivable. If we don't do reinstatement here, the first double entry here, then we do not know what to credit here. We debit cash and what do we credit then, right? That's why we need to record back the account receivable. Understood? So far, so good?
Yes.
Okay, good. Okay, so that was the direct write-off method. We only record bad debt when it happens, And after recording bad debt, let's say they come back, then we need to reinstate, or rewrite the double entries for that account receivable. Okay, the second method is allowance method. So under allowance method, every end of the year, the company will estimate how much it expects the uncollectible account receivable for the next year. So let's say 2020, the year 2020, last year. At December, the company will estimate already how much that it expect it won't collect in the year 2021. Yeah. And when it happens later on, yeah. So at the end of 2020, just now we have already estimated. And then come to the year 2021 in January, let's say for example, suddenly customer A cannot pay. Yeah, we regard that uncollectible. Then we will record that debt at that point, but the corresponding entry will be to the uncollectible account. Yeah, it's not bad debt expense anymore. We try the example so you can see. Okay. So assume this company begin operation on August 1st, yeah, and then at the end of December 31st, 2015, it has account receivable balance of 200,000, yeah, and based on industry average, yeah. So in the industry, there is information how much standard average, yeah, the industry average that the uncollectible amount for certain industry. Let's say beverage industry, this percentage could be uncollectible account receivable. Yeah. So there is certain databases, yeah, which provide those information. Okay, like ratio. Yeah, they provide ratio for certain industry. Yeah. Okay, so based on that industry average, the company estimates that 30 million of account receivable will be uncollectible. Yeah. So at the end of the year, they estimate 30 million to be uncollectible, despite they don't know how much the actual amount that will be uncollectible. Yeah. So at the end of the year, that estimation, we will straight away debit bad debt expense and credit allowance for doubtful accounts. Okay, this is estimation, yeah, not the actual, but we straight away debit bad debt expense and we credit allowance for doubtful account. Yeah, allowance for doubtful account is termed as a contra asset account because on the statement of financial position we will reduce it from receivable. Yeah, so it contra the receivable. Yeah. Have you ever heard the term contra? I think you have, right? Like accumulated depreciation account, that is a contra account because it will be reduced from the fixed asset on the statement of financial position. Yeah. And then coming the next year, only the company identify one customer of 6 million is unable to pay its debt. Yeah. So at that moment, they would record that uncollectible account as a debit to allowance for doubtful account and credit to account receivable. Yeah. So allowance for doubtful account is like a reserve, ya, seperti cadangan, ya, cadangan untuk for any uncollectible account. It's a reserve, ya. So whenever there is an uncollectible account later on, they would reduce it from allowance for doubtful accounts. Yeah? We don't anymore debit the bad debt expense because we have debit the bad debt expense when we did the estimation previous year. Okay, any question to that point? Okay, the allowance account, allowance for uncollectible accounts, it has a balance, yeah, and it will have a credit balance if the write-off, yeah, write-off just now means the actual amount that cannot be collected during the period are less than the beginning balance or the opening balance, yeah. But let's say the actual amount of uncollectible is more than the opening balance, then it will have a debit balance at the end of the next year. Yeah, can you understand me? Okay.
Yes.
Yeah, so 2020, let's say we provide 30 million just now, right? That company. And during 2021, the total uncollectible is less than 30 million. So it will have a credit balance, yeah. So masih ada simpanan di allowance for doubtful account, yeah. But let's say the write-off is more, then we'll have a debit balance in allowance for doubtful account. But that debit balance, okay, this is just to show the allowance method. So we provide the reserve for any uncollectible, yeah. And then, so it's like a bucket. You fill up the bucket, yeah. And then when we do the writing off of our customers, so it will reduce that bucket, right? We use that reserve to write off any uncollectible receivable, yeah. But at the end of the year, that allowance for uncollectible account will again be credit balance because we will create another estimation, right? Every end of the year we'll do the estimation, yeah? So I just want to mention that debit balance just now, it will be temporary, yeah? It will always have a credit balance during the closing period, yeah? Because a new estimation will be created every end of the year, yeah? Okay, let's see the illustration, how it has a credit or debit balance, yeah? So taking from the same company of Karya Mandiri, let's say during the 2016, it writes off 26,750,000, yeah? Including the one that we did the write-off of 6 million, yeah? So the allowance for doubtful account will have a credit balance of 3,250,000, yeah, because the estimation was 30 million and the actual write-off is 26,750,000. It's less than the beginning balance. So we will have a credit balance, yeah. Okay, let's say instead of having the write-off less than the opening balance, let's say we have a write-off more than the opening balance, yeah? Write-off of 32,100,000, yeah? So it's more than 30 million. So in this case, we'll have a debit balance of 2,100,000, yeah? But this debit balance is temporary before a new estimation is calculated, yeah? So when we reach December 2021, let's say, or in this example, December 2016, the company will calculate a new estimation for allowance for doubtful account. So it will always have a credit balance, yeah? Okay, after we write off the customer, the same incident may happen that the customer will pay back, yeah? We have written off her or his account, but later on they are willing to pay back. So to reinstate, yeah, if previously under the direct write-off method, you would debit account receivable and credit bad debt expense, yeah? But under the allowance method, we will debit the account receivable and credit allowance for doubtful account, yeah? So the credit side is the only difference between the direct write-off and the allowance method, yeah? And then the payment, we just debit cash and credit account receivable, yeah? Okay, any questions so far before we move to the method of estimating the uncollectibles? Yeah. So we have covered what it is receivable, and then types of receivable. Yeah. We have trade receivable and other receivable, or another way of looking the different type of receivable. We can have account receivable and we can have notes receivables. Yeah. And then the issue of uncollectible accounts, we can choose the direct write-off method or the allowance method. Yeah? Okay, if there is no question, now let's see how do we estimate the uncollectible. Yeah. So this is under the allowance method. Yeah. Because only under allowance method we estimate the uncollectible. Yeah. Under direct write-off, there is no any estimation. Yeah. So how the company estimates the uncollectible? It either can use percent of sales method or it can do the analysis of receivables method, yeah, or aging of receivables, sometimes it's called. Percent of sales method sometimes is called as income statement approach, yeah, percent of sales method. The analysis of receivables method or aging of receivables method is sometimes called balance sheet approach, yeah, or statement of financial position approach. Why is it called as income statement approach for percent of sales method? Because the focus is on the sales. The sales is part of income statement. Yeah. Meanwhile, analysis of receivables method, the focus is on receivables. Receivables is part of statement of financial position. Yeah. Okay, under percent of sales method is very simple. The estimated uncollectible is basically the percent of credit sales. Yeah. So the company will estimate maybe 5% of credit sales to be uncollectible, yeah? Or 3%. Yeah? It depends on the experience of the company, the past experience. Let's say how many percent of the sales is normally uncollectible. Or it also can refer to the industry information or industry data, industry average. Yeah? Normally there is the information how much normally percentage of sales to become uncollectible. Yeah. Okay. Okay, continuing from the illustration on Karya Mandiri. Yeah, let's see, balance of account receivable is 240,000, and then balance of allowance is 3,250, and then credit sales is 3 trillion. Yeah, am I correct? Whatever zero it is. Okay, so to calculate the estimated uncollectible, yeah, or bad debt expense, we just take the credit sales times the bad debt as a percentage of credit sales, which is 3/4. Yeah, so 3/4% times the amount of credit sales, then we can get the estimated uncollectible of 22,500,000. Yeah. So to record that, we debit bad debt expense and we credit allowance for doubtful account. Okay, under percent of sales method or income statement approach, yeah, the total of estimated uncollectibles will be credited to allowance for doubtful account. Yeah. So we calculate just now 22,500,000. So we just simply credit the allowance for doubtful accounts 22,500,000. Yeah. It would be different for analysis of receivables later on. Yeah, you will see it. Yeah. For percent of sales method is simple. The whole amount is credited to the allowance for doubtful account without considering the balance here. Yeah. Later on, when we see the analysis of receivable method, we need to consider the balance before the adjusting entries. Yeah. Okay, now we move to analysis of receivables. Yeah. The estimation based on the analysis of receivables is based on the assumption that the longer the account receivable is outstanding or is due, yeah, the less likely that it will be collected. Yeah. Let's say customer A has been not paying after 60 days. Yeah. So the longer it becomes that amount is outstanding, then the less likely that we can collect that debt. Yeah. Okay. So how do we do the analysis of receivables method? We need to determine the due date of each account receivables. Yeah. So normally it will divide certain columns. Yeah. How much is due currently? Yeah. Currently means within this month maybe. Yeah. And then 30 to 60 days maybe. And then 60 until 120 days. So they would classify according to the length of the receivable has been due. Yeah? Okay, so, and then the number of days, like I mentioned, so they will calculate how many days already has been passed from the due date. Yeah. Let's say the credit term is 30 days, but the customer has not been paid. So they will calculate how many days already being late from the due date just now. Yeah. Okay. And then each account receivable will be placed according to the group, yeah, to the number of the days that have been passed. Yeah. So the typical groups or classification of the aging receivables. First is not past due. Like I say, the first column is the current or not past due, and then 1 until 30 days past due. Yeah, means it has already passed more than 1 or until 30 days, and then they will classify 31 days until 60 days until etc. Yeah. Over 365 means it's over 1 year already being due. Yeah? Okay, maybe I mentioned to you, I did a marketing job previously. So this is what I hold all the time, okay? I have an aging receivable table with me that I have to control every day, the payment. And every month we will do a meeting, yeah? The collection meeting, yeah? So if we don't perform well during the meeting, then normally it's not so good for us. Yeah? The manager will discuss for each marketing executive how much the amount of collection that we have not met, you know, and etc. So this is the indicator of performance for the marketing executive, how much they can collect from the customers. Yeah? Okay, after we determine the number of days just now, yeah, the past due dates for the customer, then we will calculate the totals for each age class. Yeah, let's say for the amount for 1 until 30 days, how much the total amount that has not been collected. Yeah, and after that, the company will provide percentage for each group of days overdue just now. Yeah, the longer the overdue, the higher percentage will be regarded to be uncollectible. Yeah, so let's say 1 until 30 days due, maybe 1%. Yeah? But 31 days until 60 days, it will be 3% maybe. Yeah, because the principle just now is the longer it is due, the less likely that we'll be able to collect the debt. Yeah, and then the last step is we will total the whole estimated uncollectible from each group of the aging receivables. Yeah. Okay, let's see the illustration. Yeah, let's say this company prepares an aging schedule for its account receivable of 240 million. Yeah. So here we'll have a list of customers, all the customers. Yeah. And under each customer, it may have a different due date, yeah, for the payment of their receivable. Yeah? Let's say this customer Hanif balance 1,500,000, yeah, and then we'll have the column not past due or current, yeah. So sometimes it's called as current. It's not yet due, yeah. And then 1 until 30 days, and then 31 until 60 days. So this Hanif, the receivable from Hanif is already past due beyond 30 days, yeah, 30 until 60 days, yeah. And then if it has another customer, we will identify how many days it has been overdue, yeah. Let's say for this Erica, 6,100,000 total, but the overdue 3,500,000 is 91 days until 180 days, and the balance is 181 days until a year, yeah, 365 days, yeah. So it goes for all the customers, yeah. For big companies, you don't do this manually, of course. The system will provide you the information, yeah. The accounting system will generate the report, yeah. And from here, it will give us the total for each classified age group. Following me? Okay, so the not past due, it doesn't give the details, the whole thing. Yeah? So you cannot add up this and you get 240,000. Yeah? This is just an example. Yeah? It has other list of customers. Yeah? So not past due is 125,000. And then the next group 1 until 30 days is 64 million, sorry, just now million. And etc. until over 365 days. Yeah. So we say the principle is the longer the receivable has been due, the more likely that that will become the bad debt expense, or the less likely that we'll be able to collect that debt. Yeah? That's why the longer it has been due, the higher the percentage will be allocated to estimate the uncollectible amounts. Can you see it? The not past due 2%, and then it goes higher and higher, yeah? Because we assume that makin tua or makin lama hutang itu, maka semakin sedikit peluang untuk customer membayar kembali, ya, dari hutang tersebut. Okay? Okay? Any question? No?
Miss, for the percent uncollectible, it's determined by the company, that we determine based on the calculation, right, Miss?
This is normally the industry practice, yeah. How many percentage we allocate for each group, yeah, it's decided by the company, but normally there is a common industry practice, yeah. We don't calculate how to get 5%, how to get 10%. It's just rationally how the percentage is increasing for the longer the receivable is due. Yeah? But yeah, certain industry, it has certain common practice, yeah, or it also based on the experience, the previous experience. Okay. Okay, any other question? Okay, if there is no question, we move on to how do we record the adjusting entries under allowance method, but using the analysis of receivables to calculate the estimated uncollectible. Yeah. Okay, we calculate the estimated uncollectible is 26,490,000 here. Okay, this is the total from all the groups of age receivables. Yeah? Okay, under analysis of receivables method or balance sheet approach, yeah, this total estimation we don't straight away credit it to allowance for doubtful account. Yeah, we need to see the balance in that account first. Yeah, let's say in this example, it has a credit balance of 3,250,000. Yeah, so the amount that need to be included in adjusting entries is this 26 minus the balance that it already has in that account. Okay, so the idea is under analysis of receivables method, we want to have the total balance as 26,490,000. Yeah, the total balance in that account. Yeah, that's why if it already has certain balance, yeah, the adjusting entry need to consider that existing balance. So we need to deduct with the existing balance. Yeah. If it has a debit balance, what happened? Let's say debit balance of 3,250,000. What is the amount then to be journalized in the adjusting entries? Anyone? Open your T account, yeah, and you have a debit balance of 3,250. And at the end of the year, you want to have this total balance, 26,490. Yeah. So how much do we credit in the adjusting entries? So it's opposite way. Yeah, we need to add that 3,250 if it has a debit balance. Can you try to put it in T account? Oh, it has here. Okay, like I mentioned just now, you want to have the ending balance to be 26,490. Yeah, that's why you don't credit the total 26,490 in the adjusting entry, but you need to deduct first the credit balance that it has in that account. Yeah, but let's say it has a debit balance here, 3,250, unadjusted balance. And still you want to have the ending balance as 26,490, then you need to add, yeah, 26,490 plus 3,250. Then your adjusting entry will be more than 26,490. Yeah. This is under analysis of receivables method because the focus is on the receivable. The focus is on the statement of financial position, and on the statement of financial position, you want to have this balance, yeah, the total estimated and collectible, yeah. Unlike the percentage of sales method, let me go back. The focus is on income statement, yeah. So because on income statement, the bad debt expense, you want to have the total amount that you calculate from the estimation. Yeah, that's why you don't need to consider the balance in allowance for doubtful account. Yeah, so the total amount of estimation is just straight away debit bad debt expense and credit allowance for doubtful account. Boleh ngerti rasionalitas? The rationality, can you understand? Yeah. If you don't understand the rationality, then just memorize. Percent of sales method is the total amount of estimation. You debit to bad debt and credit to allowance for doubtful account. If analysis of receivables method, you need to see whether the allowance for doubtful account, does it have any balance? Yeah? If it has a credit balance, then you have to deduct that amount first. Yeah? Only you record the difference to the bad debt expense and credit allowance for doubtful accounts. Yeah? If it has a debit balance, then you add first. Yeah? Because the ending balance, the ending adjusting balance, you want to have this from the estimation amount. Yeah? I hope you understand. Okay. If you don't, then later on you do the exercise, then you would understand. Okay. Okay. As I've been explaining just now, the percent of sales method, the emphasis or the focus is on the income statement. Income statement is bad debt expense. Yeah? Bad debt expense which will record in the income statement. Yeah? So any estimated amount, the total estimated amount, we need to straight away debit to bad debt expense. Yeah? Bad debt expense, it doesn't have any balance, yeah, the expense account. But analysis of receivable method, the focus is on the statement of financial position, and you want to have that total estimation to be the ending adjusted balance at the end of the year. In this percent of sales, you want to have that total estimation to be in the bad debt expense. Yeah, that's why there is no need for adjustment in bad debt expense. But allowance for doubtful, you need to adjust because it has a credit or debit balance. Yeah. Anyone understand? Maybe you can explain to the class in your own language. Muharram, can you understand?
Yes.
Can you understand?
Yeah, miss.
Can you
Based on
can you explain to the class? Maybe they can understand better in your language.
what should I explain, miss? Is about the
Yeah,
allowance method write-off
difference, yeah,
or
difference of adjusting entries under percent of sales and analysis of receivables.
okay, miss. I will try. If we if we use the analysis of percentage of sales, we only times the sales times the percentage of sales. But if the how to say in the aging schedule, we only we see on the total of bad debt expense or total of AFDA. We call it AFDA, allowance for doubtful accounts. Why we need to adjust the AFDA on the adjusting entries or on the final period? Because we want to know the how to the ending, which is credit or the has explained just now. Let's say if the AFDA is on the credit, means that we have to deduct it. If the AFDA is on the debit, we have to add it somewhere like that, miss.
Okay. Anyone else understood? Anyone else wants to try your way of understanding it? Zahra, which one Zahra? Zahra Maulida?
Yes, miss.
Yes. Zahra, how do you understand? Or you don't understand yet?
Not really.
Not really. Who
Yes.
understand? Who else understand? Who else? So no one understand. Oh, sudah. Let's try. Who? Azmi, do you understand, Azmi? Okay, anyway, try to understand it. Yeah. If you cannot understand the logic behind the different treatment under two different estimation methods, then memorize it. That's the weakest selemah-lemah iman, insyaAllah. Okay. Just memorize how do we treat differently under different estimation method. Okay. Now let's try comparing direct write-off and allowance method. Yeah. Okay. For this example, PT Cakrawala for the year ending December 31st, 2015. Let's try without seeing the answers. On March 1st, wrote off account of Cindy Fitriani 3,650,000. Under direct write-off, how do you record Afdalur Rizki? Afdalur Rizki, are you here?
Yes, yes, Miss.
Okay, how do we record under direct write-off for the transaction March 1st?
In debit, write-off it means bad expense, Miss. It's similar like, no.
What? Write-off? Write-off, it becomes bad debt, eh? Write-off, we
Oh
want
yeah,
to
it means
eliminate, yeah, that customer from our record, yeah. That's why write-off, yeah. Okay, how do we record the
it
direct?
means the debit is bad expense, and then the credit is
Quickly.
account receivable.
Okay, kurang cepat.
Yes.
Okay, what about allowance method? Afdalul, cepat, quickly.
The direct write-off.
Just now direct write-off. Now allowance method. How do you record that March 1st transaction?
Bad debt expense in debit and allowance for doubtful account in credit.
Sure. Who wants to comment on that? Are you sure that how
Me, Miss. No. 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 Not really.
Okay. Okay, go ahead.
If we use direct write-off, we only state it on BDE or bad debt expense on account receivable, and also if allowance method, we use AFDA, allowance for doubtful account.
Debit or credit, Afda?
AFDA debit, Miss. Account receivable.
Credit, yeah. Okay. Next, April 12th. Must quick, eh? Who wants to try? Oh, I need to ask someone. Quickly, cerdas cermat. Ryan, which one Ryan? Ryan, April 12th, direct write-off method. How do you record that? Ryan?
So in direct write-off, the first is I don't know how to explain it, Miss.
You don't need to explain. It's just double entry. What do you debit and what do you credit?
In
Okay, who wants to help? Quickly, quickly.
Can I again, Miss?
Others lah, others. Someone else, someone else. Ladies, sisters. Aisyah, Aisyah Fania.
Yes, Miss.
Okay, try.
April 12, yeah, Miss.
Yes, yes. If you cannot the full entries, whatever that you can give the answer.
Mm, is that cash on debit to 2,250,000, and then
Credit, what is credit?
bad debt on debit.
Just now, debit cash, credit what? 2250. Debit cash, credit?
The
Or
bit. So I
Oh, you combine it.
Bismillahirrahmanirrahim. Yes.
Okay, okay.
Received 200 to 2,250,000 in cash on the beat, and
Okay.
then partial payment on the it's mean the bad debt expense 550,000 100,000 on debit, and then account receivable in credit. Account receivable is 7,750,000. Yeah, is that?
Comment, any comment, any objection from others? Received 2,350,000 as partial payment on the 5,500,000 account of Clara Putri. Who just?
Miss.
Yes.
Actually, what Aisyah state is correct, but I have another optional way, Miss. It's based on what I
Okay.
exercise myself on Universitas Indonesia. Also use this one reduction, and the answer is like this, Miss. Cash on account receivable, and also BDE on AFDA. Is it correct, Miss? For allowance method.
BDE on
AFDA. First, cash account receivable.
Under. Sorry. Okay, we continue. Sorry, I was cut off. Let me just hotspot. Okay, April 12. Can you hear me? Can you hear me? Hello? Hello? Can you hear me?
Yes, Miss.
Yes, Miss.
So sorry. Okay, April 12, under direct write-off, so you would debit cash 2,250,000 and debit bad debt expense 2,250,000, right? And credit cash credit cash, sorry. Credit account receivable 5,500,000. Right, under direct write-off. When it says as partial payment on the 5,500,000 means this is part of this. Okay, so the total amount is 5,500,000. So partially we receive cash, partially goes to bad debt expense. Yeah, or you can record it separately: debit cash, credit account receivable 2,250,000, and then debit bad debt expense, credit account receivable 2,250,000. Right? Can you get me?
Miss, BDE on AFDA or BDE on account?
BDE on account receivable under direct write-off method.
Oh, okay.
Under allowance method, how do we record that? Why BDE on AFDA, Muharram?
Because first is cash on account receivable, Miss. We state 2 million, 2.250 million, but on we separate it after sebesar selisih 5 kurang 22 3.
My internet is not that good. Hello? Hello?
Yes, Miss.
Yes. Sorry, the amount I mentioned is not 2250. Yeah? It's 3250. Yeah? Supposedly to bad debt expense. Yeah? Sorry, I miscalculated. But Muharram, why do you record to credit allowance for doubtful account under direct write-off? I didn't get you, sorry.
No, direct write-off, Miss. I mean on the allowance method.
Yes, under allowance method, yes, we will have allowance for doubtful account. So you debit cash to 250 under allowance, and then you debit allowance for doubtful account 3250, right? And then
Yes.
credit account receivable 5,500,000. Yeah. Sorry, I wrongly calculated in the beginning. Yeah, it's not 2250 to 250. It's 2250 and 3250. Okay. Any question for April 12? Under direct write-off, we never have AFDA account. We never have allowance for doubtful account. Yeah. That one is only under allowance method. Yeah. Okay, June 22nd. Who wants to try? Quickly. Received 3650 from Cindy Fitriani, which was written off on March 1st. Reinstate the account and record the cash receipt. Under direct write-off, who wants to try? Quickly. We debit account receivable and we credit bad debt.
Bad debt expense.
3650, and then debit cash 3650 and credit account receivable. Yeah? Under direct write-off. Under allowance, we debit
Account receivable and credit
credit
allowance
allowance for doubtful
account.
yeah, and debit cash and credit account receivable. Yeah, I hope you don't have any issue on that. And then September 7 wrote off the following accounts as uncollectible. This is like you record for March 1st. Yeah. So under direct write-off, you would debit, bad debt expense, and credit account receivable. You have to think quickly now. Debit, bad debt, and credit account receivable. Under allowance, you would debit allowance for doubtful and credit account receivable. Right. Okay, the last one, December 31st. The company used percent of credit sales method of estimating uncollectible expenses. Based on past history and industry average, 1.25% of credit sales are expected to be uncollectible. The company recorded 3,400,000,000 of credit sales during 2015. Yeah. So under bad debt expense, do you record anything here? I want to ask your understanding now. For December 31st. No. Oh, under direct write-off, sorry, under bad debt. Under direct write-off, do you need to calculate anything here? No, right? Because we don't provide any estimation. Under allowance, how do we record here? Under
BDE
allowance.
on AFDA.
Yeah,
BDE on
AFDA, the amount is 1.25% times the credit sales, yeah, which is 42,500,000. Okay. Any questions so far? Don't keep it to yourself if you don't understand. Okay, again, let's compare between the direct write-off and allowance method. In summary, bad debt expense is recorded under direct write-off method when the specific customer is determined to be uncollectible. Yeah. Meanwhile, under allowance method, bad debt expense is recorded based on estimates at the end of accounting year, based on either percent of sales method or analysis of receivables method. Yeah. So direct write-off and allowance method is the method to treat the uncollectible accounts. Yeah. But percent of sales and analysis of receivables is the method to calculate the estimation of uncollectibles. Don't get confused, yeah, because you have these two methods, you have another two methods. Okay. Okay. Allowance account. Under direct write-off, we don't have any allowance account. But under allowance method, we have allowance for doubtful accounts. Yeah. For direct write-off method, normally is used by small companies or the companies with less number of receivables, yeah, like I mentioned in the beginning. Allowance method is used by the big companies or the companies who have a significant amount of receivables. My question again, why small companies use direct write-off? Why big companies use allowance? What's the reason? Raihan, which one Raihan? Raihan Atia Putri? Raihan? Oh, sorry. Raihan? No? Siti Lutfia? Siti Lutfia?
Yes, Miss.
Okay. Siti Lutfia, to your understanding, why small companies use direct write-off and why big companies use allowance method? If you,
I'm sorry, Miss.
okay, in Indonesia also fine, in Bahasa also fine. In Chinese also fine. I can understand. Sure. Or in Malay. I can speak well Malay. Yeah, Siti? Why do you think small companies use direct write-off method? Siti? Siti?
Maybe because small company choose to use direct write-off method is because it is more lebih praktis maybe.
Okay, it's more practical. They don't need to calculate the estimation. Acceptable, the answer is acceptable. Yeah, it's more practical, it's less costly for small companies. And also, the reason is because they don't have so many receivables. So when there is a bad debt, it doesn't really affect their financial position, yeah, because the amount is not significant. So if they record only when it happens, it doesn't really affect their financing, yeah, it doesn't really affect their financial position, yeah. But for big companies, because they have significant amount of receivables, if they use direct write-off method, only they record when there is an actual bad debt, it will significantly affect their financial position, yeah, because they don't provide any reservation, yeah, they don't prepare for any bad debt, yeah. So when it happens, it will significantly affect them, yeah, in terms of financially, etc. Yeah? But if they provide a reservation, they reserve some amount. That means when it happens, it won't really affect them, yeah, the bad debt, yeah? Or the uncollectible, because they already expected, yeah. Oh, we expect already that it won't be collected, yeah. Okay. For small company, it's okay because the amount is small, yeah. It's not really significant for them, yeah. Okay. Okay, now we talk a little bit about the notes receivable. I'm trying to finish the topic. Okay, so notes receivable is the formal form of account receivable. Yeah, it has a note, it has a document, yeah, promising, a promissory note, yeah, because it contains the promise to pay by the person who owes the money, yeah. So it specifies the maker in that note receivable. The maker is the party who make the promise to pay. Yeah, so that what is called as the maker of notes receivable. Yeah, and then the payee is the one who receives the payment. Yeah, and then the face amount. The face amount is the actual amount that is need to be paid, excluding the interest. Yeah, so let's say the customer is owing 1 million, yeah, so that 1 million become the face amount, yeah. Later on there will be interest as well on that 1 million, yeah. And we have issuance date on the note, yeah, means what date is the note being issued, and then the due date, maturity date, when is it supposed to be paid, yeah. Okay, the term of a note is the duration, yeah, the amount of time between the issuance and the due date. Yeah, let's say it issues on the 1st January, maturity on 31st July. So from 1st January until 31st July, that is the term of the note. Yeah, how many days or the duration. Yeah? And then interest rate, yeah. When we talk about notes receivable, it has the interest rate that needs to be paid by the maker of the note or the person who owes the money, yeah. So this is example of promissory note, yeah. So you see the maker here, which is the company, our customers, yeah, from the perspective of the company, it is our customers who promise to pay, yeah. And then the payee to whom, yeah, the order of this, yeah. And then again. Okay, sorry. So yeah, all the components of notes receivable you can identify here, yeah? The due date, the maturity amount, the interest rate here, yeah? So on the due date, the maker of the note will pay the face amount, let's say 2 million here, plus the interest of 10%, yeah? So how to calculate the interest amount? We take the face amount times interest rate times term over 360 days, yeah? So the interest rate is always reflecting 1 full year, yeah? And it's normally taken 360 days, yeah? So let's say in this example 90 days, so we take 90 over 360, so we get interest of 50,000, yeah? So on the due date, the maturity value of the note will be the face amount plus the interest. Yeah? So it becomes, let's say for this example, a company accepts 30 days 12% notes in settlement of account receivable of Nusa Kencana. Yeah. So normally notes receivable I'm very sorry. I'm using the line campus. Okay, so the notes receivable is used to convert the account receivable. Yeah. So when the time of conversion, we debit the notes receivable and we credit the account receivable. Jadi ditukar ya, dari account receivable it becomes the notes receivable. Yeah. When it pays on the due date, it will debit the cash and credit notes receivable as well as interest revenue. Yeah? So we don't mix the interest into the notes receivable. Okay, let's say on the due date, the customer still cannot pay that note. Yeah? Then again, it will be returned back to the account receivable. Yeah? That what we call as dishonored note receivable. Yeah. So we debit again the account receivable of that customer who has not paid, and we credit the notes receivable to close the account of note receivable, and we credit on interest revenue. Yeah. This in the case of the customer cannot pay the note. Yeah. Okay. Say for this example. Very bad, my line. Okay, it issues 4 million, 90 days, 12% note, December. So on December 1st, we'll record the notes receivable, yeah? And then at the end of the month, we have to calculate the interest receivable, yeah? Because as I mentioned, that interest is reflected throughout the year, yeah? It's a monthly interest revenue. Yeah? Even though it's not yet the due date, we have to calculate for that month's interest revenue. Yeah? That's what we call as accrued revenue. Yeah? The revenue is supposed to be received, but it's not being paid yet. Yeah? And when the payment, they will pay together the whole amount of interest. Yeah? So we debit cash and we credit notes receivable and we credit interest receivable and the balance of interest revenue that can be recognized until March 1st. Yeah? This 40,000 is only interest for 1 month from 1st December until 31st December. Yeah? But the 80,000 is the interest for 2 months, January until February. So it gives the total interest of 120. I hope you're following me. Okay. So presentation on the statement of financial position, all receivables that can be expected to be collected within a year will be included in the current assets. Yeah. As I mentioned, the order or the structure of current asset in the statement of financial position, it follows the liquidity. Yeah. So first, cash is the most liquid, and after that, the receivables, and after that, the inventory. Yeah. So account receivable is normally will be attached together with less allowance for doubtful account. That's why we call this as a contra asset account. Yeah? And the net amount, account receivable minus allowance for doubtful account, we call this as a net realizable value of receivables, yeah, or NRV. Okay, this is not actually the core coverage of this course, financial ratios. You will learn it during one specific course on financial statement analysis. But just to mention briefly, for account receivable, we have account receivable turnover ratio, and we have the number of days sales in receivables. Yeah? So the ratio will show us how often or how frequent during the year the account receivable are being converted into cash. Yeah? So the higher the account receivable turnover ratio, the better is for the company. Means the company is able to collect the cash from the customers. Yeah? Okay. This is just how you calculate the account receivable turnover ratio. Basically, just take the sales and then divide by average account receivable. Average account receivable is the beginning balance plus the ending balance divided by 2. Yeah. So let's say here is 8 times, mean 8.8 times the company is able to convert their receivable into cash. Yeah. This is the length of time account receivable has been outstanding. Yeah.
Miss,
Yes.
I have one question. Like what Miss have stated on the beginning, we know that sometimes when company cannot pay the receivable, it automatically will be the not receivable if they want to change it, Miss, from account receivable to not receivable. On the progress, the company also cannot pay, and they discount to the bank. How do we proceed the discount that, Miss? Thank you.
Okay. Yes. It's not within the slides. Yeah. Actually, yes, there is an issue of factoring. Yeah. We call it factor. The company may factor the receivable to other companies. Yeah. There is a factor company specifically or to the bank. Yeah? So they sell that receivables because they don't want to wait for so long for the payment from the customers. Yeah? So normally when they factor, the term is factor, dianjak, piutang itu dianjak ke pihak yang lain, ya, pihak penganjak piutang. Ya. When they factor, normally there is a financing charge. Yeah? So the company would receive less than the total amount of receivables being sold to other factoring companies or to the banks. Yeah? So they would record the financing charge. So let's say receivables of 1 million being factored to a factoring company. So we would record, we would close that account receivable. Yeah. And we would get the cash less than 1 million because we'll pay for financing charge. Yeah. So debit cash, let's say financing charge is 100,000. Yeah. This is just for illustration. So debit cash 900,000, debit financing charge 100,000, and credit account receivable. 1 million. So we close that account receivable. We don't longer responsible to collect that receivable. Ya, kita sudah jual piutang tersebut ke pihak yang lain. Okay? Is that what you mean, Muharram? Am I getting your question correctly?
Yeah, Miss. But we know that sometimes a bank gives us also the interest, Miss. How do we proceed that interest? Let's say that the company firstly give the interest 10%. Then when we disconto on the bank 15%, is that double or how?
Oh, the notes receivable first from the customer. They are
Yes.
supposed to pay
Yes.
us 10% interest, right? The customer is supposed to pay us 10%.
Yeah, Miss. If
And then we factor it, right? How
yeah.
come the bank is paying for us 15%? We are paying the 15% to the bank. It means the receivable is being reduced. Yeah, we will get the cash from the factoring company or the bank, but the less amount. But we get it immediately. That's why the company doing the factoring, because they don't want to wait for so long. Jadi langsung dialihkan beban pengutipan piutang itu kepada pihak yang lain. Yeah? So there is a discount there. So it becomes the expense for us, Muharram. I'm not quite sure what you mean by the bank is paying interest for us.
Like this, Miss. Let's say like we when we sell the
Receivable.
penjualan, yeah, the sales on account means that credit, that Miss. Then when we want to pay that how to say let's say like this, not receivable on sales revenue, Miss. Terus pas di not receivable itu kan ada persen bunganya, Miss.
Yeah.
Kita pertama udah meramal nih, oh berapa sepenuhnya nih segini loh totalnya.
Aduh, pesan ini.
Ya, tapi ketika kita diskontokan, what I mean is when we discount to the bank, when we proceed it, do we have like state interest receivable or not, Miss?
Interest receivable from the bank.
Yeah, Miss, or not? Oh, perhaps I will discuss later with the question, Miss.
Okay, when we meet on Friday, inshallah, yeah, then we can
Okay, Miss.
discuss in line. Okay. Okay. Any other question before I get off again from this Zoom? Any question? Let me stop recording.